Knowing and planning to bridge the housing gap is one thing. Funding of the plan is another. The Federal Mortgage Bank of Nigeria, backed by the National Housing Fund Act, was formulated for this. However, industry players say there is yet a lot to be done.
This is work in progress. The important thing is that the sector is changing. The sector is providing more access to housing finance, both in the area of construction finance and mortgages. And we might not be where we intend to be, but we're making progress. Previously, you hardly can walk into any organization, any mortgage institution, primary mortgage institution, as it were, as they were known then, to get a 5-year mortgage, to get a 10-year mortgage. Most of those institutions were really not properly capitalized to be able to provide long-term funding, which is the basic driver for mortgage provision. So, but now you can walk into a mortgage bank and arrange to get a home on mortgage, not on a cash and carry basis, as it were.
The National Housing Fund Act requires that a Nigerian worker who earns an income of 3,000 naira and above per annum in both the private and public sector shall contribute 2.5% of his basic monthly salary to the fund. Every commercial or merchant bank shall invest in the fund 10% of its loans and advances as an interest rate. Every registered insurance company shall invest a minimum of 20% of its non-life funds and 40% of its life funds in real property development, of which not less than 50% shall be paid into the fund. And the federal government is saddled with the responsibility to make adequate financial contributions to the fund for the purpose of granting long-term loans and advances for housing developments. However, going by the number of deficits, it seems either many Nigerians are not aware of this or the mortgage banks are not playing their roles sufficiently.
We really didn't have a mortgage market, as it were. What we used to have was maybe housing finance, construction finance, building loans, and things like that. The economy wasn't accommodating of long-term deposits, as it were. Everybody is interested in the 90-day cycle, 60 days deposits, which are really not suitable for mortgage financing. But today things are changing. The awareness is being created, the sector is being restructured. The mortgage banks have recapitalized to a minimum of 2.5 billion for state licenses and 5 billion for national licenses. And this is also creating more awareness with such capital. You can go out, you can advertise, you know that when you advertise, you can back up your advertisement with product delivery.
Mortgages, however, received a lot of attention now than before. It is a major consideration in the federal government's ongoing low-income earners accommodation, which is in its first phase in Niger State.
The issue of mortgage, the issue of cooperative, these are the only way they can come as a group. And then you know what you need for you to get money from government is trust and credibility. So if they come under cooperative, being backed up, they can access funds, either mortgage or whatever, to get this. That's the only project. That's the only way the ordinary man can have access. But if you ask them to come and pay, even if it's 1,000, they don't have it. But when they come as a group, it will be done.
This is the highest, second to agriculture, that creates employment. Anywhere there are housing projects, you see people will be engaged, from the professionals, the contractors, the food vendors, the manual laborers, and everybody is engaged. So this is like, it has an impact on people's life, and you can see in the community, you see youths that are not engaged doing anything, you see them, they are engaged, they are doing supplies, labor work and other things. And that will reduce crime rate in the society.